Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. An interesting week in that we haven't had a week like this in a while. We're going to talk about what's happening in this grain complex, where we finish out the week with a lot of red on the screen. On the flip side of it, when we look at this livestock complex, when it has already started to happen at great levels, consumers pulling back their pocketbooks when it comes to making those meat purchases across the counter. We'll also take a look at the funds and the long term. Is it bullish for the trade? And rain, and the discussion that everybody's having is corn versus beans. Is it really a big deal anymore when it comes to the acre wars? Stick around. That's on this week's edition of the Nebraska Soybean Board Weekly Market Roundup.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, welcome back. As you see on the screen, joining me is Kyle Bumsted, Kyle with Allendale, and Heather Ramsey with the ARC group. So lots of things happening. Heather, we're going to kind of put you in the hot seat to start out with, because this is not a typical week that we're used to when it comes to a lot of down markets on the grain complex.
Yeah, it's been really interesting to finally get some rain and have some opportunity to touch base with clients again when they have all the time in the world. And, they step out of the tractor and the planter and the markets are up. And they're just, every time that they get into a tractor, get into a sprayer, get into anything and get busy, they come back to the markets and the markets are up. So they've kind of gotten in a pattern of being used to, especially for the last couple months, especially that every time they do get a chance to look at the markets, we're up. So no big deal. This week is really the first week where they've had some time to pay attention, and it's not given them the market movement that they've been looking for and have become accustomed to. And so we're starting to feel a little bit of concern from clients finally saying, oh, well, what if it goes down? Which is, kind of my job to say that all the time. So it's been interesting to have those conversations with them and kind of put it in perspective that, we're at some point we are due for pullbacks. It's just kind of the natural progression of the market. We need to see those healthy pullbacks. I would really consider this probably our second healthy pullback since about March timeframe. We've really just been on one kind of agenda up until about 2.5 weeks ago or so. And then this week, and truly those pullbacks, a lot of that is secondary trickle over effect from kind of what's going on in the macro side of things. So I can't say that I'm surprised to see the markets react like this after getting, interest rate increases and a little bit of a panic, a hands-off, risk-off type stance over in the macro and the financial side of things. But it is making people a little bit nervous to see that for the first time in several months. It's been easy to this point, and now we have to put our, risk management hats on for real and make some actual decisions happen. So seeing that in corn, seeing that in soybeans, even a pullback in wheat after actually an early week, really good move earlier this week on wheat. So I think it's just kind of that time. We've got all these outside things happening besides our backyards, being extreme drought to now really wet. We can't just think about that when it comes to grain marketing. And so we have to be prepared for things like this, pullbacks like this to happen.
All right. Well, Kyle, I'm wondering, on the flip side of this, as we look at it from a livestock perspective, seeing the grains go down probably puts a little extra hop in the step.
A little bit, but I was a little bit concerned here with the way feeder cattle did trade here, especially today. We had a sizable setback in corn at one point. We were down nearly 20 cents here in old crop corn, 20 cents in new crop corn, and feeders just couldn't seem to get a bid. So that's a little bit concerning. But when you look at the grain complex as a whole, I'm not sure the feeder cattle traders really believe in this massive setback here in the grains. Now, the setback in the grains due to a lot of money flow, like Heather said. But when you look out in those far deferreds, those commercial spreads out there, there's no carry in the corn market from Dees to next July. So they're really not saying we want you to hold your corn until next July that you're putting in the corn planter right now. They're saying they want your corn here in December. And when you look at the soybeans, flip side of that, on the soybean side of things, there's no carry in the soybean market. In fact, you've got an inversion out there. So looking at the soybeans here, you're 10 cents higher in November than you are next July. So that's still saying we want your grain, we want it now. And the commercials are under the impression that as of right now, as we sit here on the 6th of May, we're probably not going to produce enough in their eyes right now. But when you look over here at the live cattle and the feeder cattle side of things, it's the complete flip. We've got carry, we've got structure out there saying, well, yeah, grain's a little higher, but if we hold them another 30, 40 days, we can capture that premium out there. So it's been more of a hedge and roll type market in this live cattle side of things, Susan.
Well, Heather, I see you kind of shaking your head in agreement as Kyle talks about this. What's going through your mind?
From the commodity, from the row crop side of the equation here, we've been watching these spreads, and for 2 years now, we've been fighting this battle, so to speak, of there being absolutely no carry. I think that we've seen this week, to Kyle's point, we've seen the end users actually go and strengthen up those harvest bids. We see them strengthening October and November basis values and nothing else, which is very telling. I think also, if you look at the grand scheme, that the big picture here is this is the smallest corn acreage we've seen in years in this country. And where we're also having issues in South America on that corn crop, we're one, they're two, so kind of a big deal that we really have as many corn acres as we can. The market is probably not going to entertain much of a loss in corn acreage here going forward. And there's some historical data out there that tells you, what's the best time frame to plant corn in Nebraska, for example. Well, that was this week. From a production, from a growing season, when you look at things, the likelihood of, if you plant during this week, you have the best crop you could possibly have. And that's also information that the market, analysts, traders, everybody is looking at too. So there's specific weeks for every region. And most of that falls into sometime now through the 10th of May. Well, the 10th is only 4 days away, and it's extremely wet everywhere. So the market really can't tolerate, from a supply and demand standpoint, at least, especially supply side, can't tolerate much of a decrease in corn acreage. So this setback on the financial side, we expect ebbs and flows. Do I believe that it's long-term at this point in time? I still think we've got our seasonal window here to come. We're not at a time yet to be making decisions, but we've got to be very participatory, from a farmer standpoint. Like, you can't sit on your laurels here, because the market has shown you that if we get the right combination of things on the opposite side, we can move lower, so don't be silly, obviously. But is there still windows of opportunity to come? For sure. But we have to be paying attention, take action, and be participatory in these markets. I don't know that the market really cares about a corn to bean ratio at this point. We just need all the acres we can get.
All right, Kyle, I want to switch over to you as we continue here with the Nebraska Soybean Board Weekly Market Roundup. We talked a little bit about the consumer pocketbook, you and I, before we even started this program. And you see folks going into the grocery store and they're counting their pennies right now.
Yes, that is correct. We've seen some sizable setbacks here in the box beef market, and when you look at that, that is an economic indicator for me. We've seen the stock market S&P. The S&P, I think it's on its fifth lower weekly close here. The Dow, it's down as well too. And when you look at the price of rising energy costs, gas at the pump, and diesel fuel and things like that, not only on the logistics side, but as a family, if you're trying to feed a family of 4, family of 5, going to the meat counter is not the most economical thing you can do right now. Couple that with some of this wet weather we've had. I'll give it that. There's wet weather, and we're not technically right into grilling season yet, but we've seen some sizable setbacks here in the box beef market. I think for the year we're down about $10 on the choice, and a little bit more on the select than that. So it is a major concern. I mean, our carcass weights are not coming down here in live cattle as quick as we'd like to see them, and I know a lot of analysts think a month ago with this high dollar grain that the weight's just going to fall right off. Well, it's not happening just yet. And when you look at that, translate that over, we still have a lot of high quality beef and pork offered, but prices, the consumers simply stepping back and say, I don't know if I can really afford this gas car.
Well, I know from an export standpoint, we've had some decent numbers. I mean, the month of March had some struggles in it for beef and pork, but still the overall picture is looking pretty good.
So far, it is looking okay. As far as the beef side, the pork side, we're not seeing near as much out of China as we'd like to see. So it is a little bit concerning on the pork side of things, and it is somewhat concerning on the beef side of things. We've got a dollar that's hit new 20-year highs here recently, and so that does have an effect on our exports long term. Do we eventually price ourselves out of the market?
Heather, from a grains perspective, man, I'll tell you, it's probably one of the quietest weeks we've had in a while for exports, even with China on holiday.
Yeah, it was definitely below expectations. It's below kind of the target that we need. The pace has been pretty good through the last couple months. And as long as we kind of put it back in gear starting next week, next 2 weeks, we would be on pace to meet some of those USDA goals. I think the one thing that I have been keeping an eye on more so than maybe I thought I would be is what's going on with China's economy, and especially in relation to their lockdowns, their quarantines, their COVID response. Because every time we see an uptick in that, then obviously we see a downtick in what they're purchasing and kind of where their money is flowing. So that's concerning. It's not the top of the concerns list, but you definitely want to keep an eye on it. I think the other interesting fact about exports, we've seen significant exports of wheat out of Russia, more than what was expected. And so the question is going to be, what continues out of there? And then when you start looking into that wheat side of things, where are we going to backfill those export needs with all the issues going on, the drought over there in the wheat growing areas of Europe?
Well, we've talked a lot of great things for today, and I appreciate both of you joining us. Kyle and Heather, thank you so much.
Thanks, Susan.
Want to wish everybody, of course, a very happy Mother's Day. Whether you're a mother by blood or not, you make a big difference in the world, especially in the world of agriculture. Just a reminder, commodity futures and options involve a substantial risk of loss, not suitable to all investors. A great week.